And we are live Wednesday, May 21st, 4:34 p.m. So let's take a look at what happened today. We had a little bit of a kerfuffle with the 20-year bond. So we are going to be taking a look at that first. What happened exactly? How can this impact the stock market? So this is the theory behind the bonds, yields, and how it can impact the stock market. And then we are going to take a look at, we have the tools to look at how this can impact the stock market. Isn't it wonderful? We have those tools. So the US Treasury 20-year bond auction, so they had an auction on May 21st, so this is today, had significant market repercussions due to weaker than expected demand, highlighting investor concerns over the nation's health. So basically, the US wanted to borrow money. They wanted to borrow $16 billion for 20 years. And the way they do this is that they issue a bond, which is an IOU. I owe you this amount of money, and I will give you this amount of interest for you to give me this money. So 5%, 5.047%. So this is the yield that the US had to pay in order to borrow that money, exceeding the when issued market rate of 5%. So basically, the US tried to issue that debt, these IOUs, with an interest rate of 5%, but people were not how can I call it? Were not that interested. So the US had to jack up the interest rates. You are going to say, well, okay, it's just 0.01% more. Yeah, but it's still some sum of money on $16 billion. So basically, people are losing, at least for this specific event. This specific event, less bond buyers were interested in the bonds at the rate that the US was proposing them. So this is sending a signal. This is a fact. This happened. The signal part is what is hard to see. We are going to take a look at the impact that we saw today, and every single day we are going to look at if we are going to see further impact. But this is the event. So how can this impact the stock market? We have 5 ways that this can impact the stock market. 5 ways. Rising yields, higher borrowing costs. When demand is weak at bond auction, the US Treasury must offer higher yields. We saw it, 5.047 instead of 5.035. Higher yields on long-term bonds translate to higher interest rates across the economy. Mortgages, business loan, this is the key word here, business loans, credit cards. Companies face increasing borrowing costs. So the companies that we are investing in the stock market, they are facing increased borrowing costs, or they will, which can squeeze profit margins and reduce investment growth. So, these are the theoretical impact that can be happening. It won't happen tomorrow morning, but this is sending a signal. Also, bonds compete with stocks. So when the bonds have a higher interest rate, so people might say, well, instead of investing in the stock market, I can use that money and buy some bonds and not have to think about much. So less people might be buying stocks. So when less people buy stocks, we have less demands in stocks. So the price might be not going as high as it would have been if more people wanted to buy stocks instead of bonds. Also, the valuation models adjust down. So many equity evaluation models are based on the discounted cash flow, the discount rate. So this is especially, so I won't go in all of that detail, but this especially hurts growth stocks. Growth, Tesla, Palantir, ARM, these technology companies that really rely on growth for their stock stock price. You know, Tesla stock price is pretty much hinging right now on the arrival of full self-driving in June in Austin, Texas. Yes, it won't impact the revenue of the company having that pilot program there, but this is sending a signal, and you know, it's people that buy stocks and it's people that sell stocks. So as soon as you get in people's head, it might not translate into a buying or selling behavior, or it might. So we can look at here at the bottom, the third section, we are going to take a look at, is it going to translate into buying and selling behavior? We are going to take a look at that right here in 1 minute. We are going to take a look at what impact we saw today. Then the evaluation model, we've looked at that. Fiscal health signal, weak demand in the treasury auction can signal concern about the US fiscal outlook. Yes, of course, you know. So if people want more interest rate to lend money to the US, it's because they are afraid that the US might not be able to repay. So this is a judgment on the economic health of the US. Voilà. So this happened. This is the impact, logical impact that could be happening. And now we are going to take a look at what is the actual impact. We are using on this channel technical analysis to help us measure the actual impact of any news, behavior of the buyers and sellers on the stock market. Market works in trends. We are looking at the trends. Is this happening this afternoon impacting the current trends that our stocks that we are looking at are in? Some yes, some no. And voila. So let's take a look. So Tesla right now today, so we closed at 334.62, down $9.20, 2.67% down. Post market 332, down $2.52. So okay, let's not get all excited. Let's not get emotional. Let's look at the facts. So Tesla on the daily chart is still into a downtrend. A bull trend. We are still bullish. This is our bullish trend right now. Bullish channel also. So Tesla has been going higher basically since since April 21st. This was the last low, or the first low of the bullish channel. The first low was here, the second low was here. So we are still bullish on Tesla. Tesla is still going higher. So if you are the type of investor that can only look at the stock market once a day, you should invest or trade on the daily chart, and once a day you look at your chart and you see if your trend that you are in is still intact. The trend is still intact. Boom. End of story. So from a daily chart perspective, the trend is still intact. It won't be intact if or when, it's most likely when we are going to break this support line right here. This is the support line. So we are supposed to be zigzagging, and as long as we zigzag, we are still into the channel. We are still into the bullish trend. So the trend is still bullish. So right now, no change on the trend of Tesla. Yes, we have a red candle. So this means that we opened at 344 and we closed at 334. So a Tesla share, basically you lost $10 on your Tesla shares today. It's important to know that we are still into a bullish trend, so that if you are investing on the daily chart, the trend is still intact, so you should not have to worry yet. The trend is still intact. Once we look at the 1 hour chart, so for those of us who like to trade with a little bit more precision and detail, we often trade on the 1 hour chart. So here I spoke to the Tesla investors. So as a Tesla investor, you should be okay. As a Tesla trader on the 1 hour chart, we are going to talk about this in 1 minute. So Tesla investors, you should be okay. Well, you are okay. Nothing changed. There's always a little bit of noise. So what's happening today can be qualified as noise because we are still into this bullish trend. And trends are important for investors. They are even more critical for traders because when we trade, we rely heavily on trend lines, those lines. When we are an investor, we care a little bit less about the lines. We care a little bit more about the company. Is it a great company? Is it a company that has a future? Do I believe in the company? And if you do, you buy the company. So it's investors tend to put more emphasis on the future of a company compared to the trend the company is. And there's a little bit of a mistake in there. In my opinion, there is a little bit of a mistake, because even if you are an investor in Tesla, you should still care about trends. Because Tesla has been a great company. You know, it's a great company with great products and everything. But trend-wise, Tesla has not been the best investment trend-wise. Let's just take this example right here from November 2021, where we reached $400 for 15. From November 2021 down to July of 2024, so almost 2 years, Tesla was trending down. So yes, so I know many investors that stayed in Tesla because they said, well, it's going to come back higher one day. Sure, it came back higher one day. It did. Was it the optimal use of your money to see it be worth $400 a share in November of 2021 down to, I'm going to take the worst case scenario, down to January 2023, where a Tesla stock was at $100 a share. Here, a Tesla stock is worth $400. Here, a Tesla stock is worth $100. Was that the best use of your money to leave it there? So my opinion is no. It's impossible to time the market. No. It's impossible to predict when things are going to happen, but it's easy to see what is happening in front of us. The future, nobody can predict, but what's happening in front of us, is it significant that we can, that we don't have to predict? It's happening right there. I don't have to predict if it's going to rain when it rains. When it rains, I just take my umbrella and do something. I don't know if it's going to rain tomorrow or a week from now at 2 o'clock. I don't know. But when I see that it rains, I take my umbrella. So timing the market does not mean that we need to predict when things are going to happen. It really means we see something significant happening now. We can do something about it. So even for investors, looking at trends is important. Okay, that was my spiel. I rest my case. So on the daily chart, investors looking at trends, everything's fine. On the 1 hour chart, the traders now I am speaking to the traders, the intraday traders, the day traders, the daily traders. Looking at the 1 hour chart, What did happen today? So on the 1 hour chart, we have a lot more details to play with. We have a lot more candles. One candle equal 1 hour of trades, of transactions. So we were into a congestion zone. A congestion zone is just a price limit and floor. So we still have a ceiling at 350. Tesla stock cannot go above 350 because buyers don't want to pay 350 more than 350 for that stock. So this is the resistance. So this is the resistance side of the price, and the support side of the price is at 332.65. So on the 1 hour chart, we are still into this congestion zone. The Tesla stock since Tuesday, May 13th, so about a week. Since a week, Tesla has been going sideways. Now we are getting close to the support line. We are at 334.62, and the support is at 332.65. So technically we are still above support. So technically on the 1 hour chart, we are still okay on the 1 hour chart. You can sell, as I did today. You can sell at any point in time. You can sell at any point in time. On this channel, we've looked at this move that happened. Where did it happen? It happened Friday, May 9th of this year. Tesla stock could not go higher than 295. It just could not. It was into a congestion zone again, but a different one. Resistance at 292 and support at 273.79, and the stock was just getting stuck. It was stuck between these two numbers until, boom, it happened right in front of our eyes at 10:30 on May 9th. We saw that, okay, nobody wanted to pay more in this time period here. Nobody wanted to pay more than 292.39, except that at that time on Friday, people started to want to pay more, and they actually did pay more. This is the best survey in the world. This is a real-time survey of what people are willing to pay for a Tesla share. This is incredible that this information is free. This is super free. You get TradingView, which is free, and you get this, and this is free. So this is fantastic, and this video is also free. So this is fantastic. So on Friday, boom, people wanted to pay more, and we identified this, and this is what we call in our jargon a buy signal. So some of us in the community, we bought in here, and we let Tesla continue. So once we have a break of resistance, it should continue, and this is what Tesla absolutely did. So it continued. So since about a week ago, we started to do a second congestion zone going sideways, and this time we did not continue yet, and we did not close lower yet. So once we have a congestion zone right here, going higher is a buy, going lower is a sell. You can buy stock, or you can buy options, they call. Here, well, you can sell stocks. This is complicated, so you can just buy a put instead. So right now on the 1 hour chart, there's nothing technically to be afraid of because we are still in support. So I sold. I'm going to say it. I sold. I sold because I'm going to tell you what. Because I am anticipating something. So this part is speculation. The selling I did just before 4 was speculation on my part. I just wanted to get my profit. I entered here and I decided to sell here. So this is my profit. So I wanted to protect my profit, and selling to protect your profit and cash it out, is perfectly fine. Nobody can complain. Well, it's nobody's business. But in terms of the concept, selling to keep profit is fantastic, because this is the goal of investing in the stock market, is to make profit. It's to buy low, sell high. Buy low, sell high. Well, buy low, sell high. So if you did that and you have profit, this is fantastic. This is great. Do I have some applause here? I don't know if you hear them. This is fantastic. Of course, we try to optimize stuff. We try to optimize stuff and blah, blah, blah. Anyway, so on the 1 hour chart, nothing's too bad for now because we are still on support, but the two signs that made me sell. And I can buy back tomorrow if things are picking back up and I see something else. So the two signs that made me sell were the following. This wick right here. So a wick, a upper wick on a candle means that the stock tried to go higher but failed. So it's a failure to go higher. So is it a good sign when a stock fails to go higher? It's not the best sign. The best sign is when it succeeds to go higher. So this is the first sign. And the second sign is that we are looking at different indicators that are smoothing out the noise that stocks do. So stochastic is a very important indicator that we use, a 21-day stochastic. You can pause the video let me see. You can pause the video right here. Boom. This is the stochastic. This is the stochastic. This is how I defined it, and this is how I have it look this way. So when the white line is in the green zone, the stock is in a bullish mode. And when it's not, it's not. So right now, stochastic is below 60 at 10. So this is not looking super good. And I did not know it at the time, but looking at the post-market, we are at 332. So we don't know. Nobody knows what is going to happen tomorrow. I don't know. I just see signs that make me want to take profit, and I took profit. And then let's just take a look at the 1 hour chart, at the 5-minute chart for fun. So the 5-minute chart, each candle is at 5 minutes. So so for the last half hour, we came down to support at 332.65. You know, if I zoom out, you are going to see the same thing, but we have a lot more candles. So we had this move up right here. A move up without stochastic over 60 is not to be believed. This is what we believe on this channel. And then we started to come back down. So maybe I'll have to buy back tomorrow if things are changing. That's fine. I got my profit. I can get back in again. Getting back in, costs almost nothing in terms of commission when you want to buy. So there's that. So in summary for Tesla, then we are going to take a look at the VIX. We are going to take a look at the bonds. You know, those 20-year bonds. This is the culprit right here. We are going to take a look at the VIX also in a minute. So let's recap what's happening with Tesla. So from the investor perspective, that if you love Tesla stock, this is great to buy it. For the savvy investor that is also looking at trends, the trend is still fine. Don't panic, the trend is still fine. On the 1 hour chart, there's nothing to panic yet. It could be rebounding tomorrow. I decided to take profit. You make your own decisions. You do your own research. You make your own decisions. It could be bouncing back up tomorrow. It could be coming down. If it comes down tomorrow, then on the 1 hour chart, this is a sell. This is a sell. We are going to have, if it happens, we are going to have a little bit of a bump at 326.34. Little bit of a bump. We could do something like this. But if we move back up without stochastic over 60, don't believe that move up. It's scary to see something move up when you want it to go down. But you look at stochastic, this is going to tell you if it's a real move up or a fake one. And then we could be ending down to the support of our bullish channel, the same one that I've been talking about. So this could mean, depending on when we are reaching it, 314 approximately. So there's a potential short worth $20 right here. So this is if we open below 332.65 on the 1 hour chart, and if we complete the whole candle, so this effectively means at 10:30 tomorrow. So at 10:30 tomorrow, the candle is going to complete, and then you are going to see if it closes. It needs to close. If the candle closes lower than 332.65, we need for it to close, because it could just do something like this and close above, and that's it. It did not close above, so the short is invalid. So this is on the 1 hour chart. So this is what we are looking for. This is what we are looking at on the Discord channel. We have a Discord server for the specific members of this channel. This video is free, but the Discord channel is not free. But you can make money with my free videos right here. So yeah, voila. So this is what we're looking at. Let's take a look at the VIX now. So VIX is the fear factor of the stock market. When the VIX goes up, stock market tends to go down. So we are always looking at this in real time, as we are looking at Tesla on the 1 hour chart or on the 5 minute chart. We are also looking at this. So the VIX started to go back up. So we are up 2.78. We closed at 2086. We have another principle. When the VIX is above 20, we are very careful about going long in any stock. Some stocks can still work. They can still go higher, but as a general rule, as a principle, when the VIX is above 20, we should be cautious. So maybe we put a little bit less money into a stock, or we don't invest or trade at all. So VIX started to go higher today. If we go on the 1 hour chart, this happened. This happened at 2 o'clock. This candle closed at 2 something. Yeah, at 2:10. It closed at 2:10. Boom. So this is where things are starting to go up, and this is why at 2:10. Look at this. A little bit earlier, I would say. No, even look at this. At 1:30. At 1:30, boom, we had the big red candle in Tesla. So this is all related. The VIX is related to Tesla and every other stock. They are not all correlated the same way. Some stocks will react more to the VIX, some will react less, but they are correlated, and I would almost say causation is also there. So VIX is going higher. So if it continues tomorrow, for sure, Tesla is going to continue down. So watch the VIX before they open tomorrow. So let's look at the bonds. So as I said, when the bonds are going higher, the stock market tends to go lower. So the bonds, look at this here. This is the first time I'm doing this chart right here. Boom. Look at this. So the previous top for the bonds, the 20-year bonds, was at 5084. So this was where this top was right here. Now, boom, we have crossed it. So the same pattern is at play. Here we had, and I cannot hear you guys. In the comment section below, you can tell me we have what? It starts with a C. We have a congestion zone. It looks very much like what we saw with Tesla. See? The same patterns are happening all the time. We have a pattern, we have a pattern, we have a break of pattern. It could have broken this side, but it chose to broke that side. And I can show you so many patterns like this. We have a pattern, it broke here, it continued. It didn't continue up to $1,000, but it continued enough to make profit. So here, what's happening with this 20-year bond chart? We have a congestion zone right here. We have the congestion zone. Boom, boom. What happened today? Oh, we have a break higher. And we know what a higher bond yield has for an impact on the stock market. It pushes it down. This is the principle. You can give me a counterexample, but it doesn't mean anything. Exceptions exist. Let's look at the 10-year bonds. The 10-year bonds, okay, here the pattern is a little bit more complex. So we had a, this is a bullish channel support right here, and we were under that line. Now, boom, we crossed that line. So this is a concern right here. It's going to be a further concern if we break 4.64% right here. This is a congestion zone right here. You are starting to recognize them, congestion zone. So if we break this, this is going to be a further move. So we are going to watch this tomorrow. We need to watch this tomorrow to see if what happened today is going to have a lasting impact, or was it just a little bit of a glimpse on the stock market. Let's take a look now at the Dow Jones, and we are going to finish with this. Dow Jones, SPX, NASDAQ, Russell, and why not take a look at Bitcoin also. Just as something fun to do. So Dow Jones, we are still into a downward channel. So this is where we were in. This is a big downward channel. So we are supposed to go down. Temporarily, we have been going up. But to show you how these lines are so important, look at how we tried to break those lines. Tried, and now we failed. So we have the impact also in Dow Jones. Stochastic is still over 60. So overall, we are still bullish. We are still above this support right here at 41,826. So that part is still okay. So this is a congestion zone again. We see them everywhere. If we have a break lower than 41,826, then again, this is going to be a concern. This is going to be a concern that things might be going further down. SPX, same thing here. Look at this, and you can watch all my previous videos. This line is respected. We tried last Friday. We tried Monday, Tuesday, and today we cannot break it. So isn't it incredible that we can draw a line and the market is respecting that line? This is never ceases to amaze me. So this is why this is a tool that even investors need. And NASDAQ, look at this. Same thing. Here we are getting close to the line, getting close. We are pretty much right smack on it. We are talking pixels, 5-10 pixels away, and now we are starting to get away from it. Here we tried and we failed. So the markets don't want to go higher. They don't want to go higher so far. So take that into account. They don't want, it's very close to getting higher, but with what happened today, we are going to have to see. I don't know. I don't predict anything. I just look at what's happening. Is it raining or not? Is it raining or not? This is what I can say. And what I'm saying, well, it's not going over that line. And Russell, same thing. Tried here, tried a bit less hard, tried, failed. So far, the picture I see, we have rejection, and now we have, okay, yesterday we had rejections too because we did not break above, but we did not have this strong of a rejection. So is this going to be, again, is this only going to be a one-time thing or a multi-day, multi-week thing? Nobody knows. We are going to discover it together. Let's now finish this stream with a look at Bitcoin. Bitcoin going higher. So 1.44% today. And again, what is it? What is this called? Congestion zone. This is the answer. So this one is a bit bigger, and sometimes it's smaller right here. Sometimes it goes all the way It's still the same thing. And we have stopped where today? Coincidence? I think not. We stopped where? Look at this. Look at the top of this wick right here. Pretty much right smack on the line. So we are at a pivotal point. We are at a pivotal point. The stock indices are not going higher. Bitcoin is about to break out. If we go above 109,632, this is what is going to be called a breakout. So if we have a breakout, I don't know if we are going to have it or when, and nobody knows. But once it happens, this is a buy on Bitcoin, because Bitcoin should be continuing if it breaks this line right here. So this is important information. We are right at the pivotal point. So watch back tomorrow. This is going to be interesting. XRP, not see XRP, this line is red. So XRP, this is not in the same position. Its resistance is at 259 and it's away from it. So it's not even trying. So XRP, no, is not as good. Dogecoin just broke above 22 cents and is resting on it. So this move right here, May 10th, was a buy in itself. And let's finish with gold and silver. So gold, this is gold right here. So gold is into a bullish channel. So this was the bullish channel it was in, and that rate of ascent, a congestion zone is horizontal. This is a channel. This is a bullish channel. A congestion zone is a neutral channel. It's going sideways. So this one is going higher. And now, not too long ago, April, we started to go higher. So just a little bit faster, a little bit higher. And so this one is bullish. So gold is bullish. It's not close to resistance. So gold is at what? This is Prot physical gold. So at 25 bucks a share. And this could be going up to this upper line. And let me just take a look at the upper part. So almost 27 bucks. So we could have a move up to 27 bucks. So there you have it. So thank you for watching, everybody. This is what it is. So investors, don't panic. Day traders on the 1 hour chart, there's a little bit of concern. You do what you want. You can sell at any point in time. As I say, buying is pretty straightforward. Deciding when to take profit is a very personal decision. Voilà. So I do a video every single day, and if you want more, we have a Discord server where we discuss things during the day. So if you can join, you need to become a YouTube member. There's a tier which gives you access to the Discord server. So thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.